Hey there, I'm Dustin with The Simple Dollar. So a recent survey by Ally Financial found that 70% of Americans surveyed between the ages of 18 and 39 knew that they needed to do more to be financially secure, but weren't exactly sure on what they needed to do to get there. Further, 61% of those surveyed found investing to either be intimidating or scary, and millennials led the pack in terms of being intimidated by investing. So hopefully in this video, we're going to ease some of the fears around investing. If you're new to the channel, welcome to The Simple Dollar. We make videos about all things personal finance, so consider subscribing if you want to catch future videos. We'll leave links to all our resources down in the description below, and if you enjoy this video or get anything of value, we'd really appreciate it if you drop down and hit the like button as well. So the takeaway from the Ally survey is that many individuals know that investing is important, but find it too intimidating or too scary to actually proceed with it. Millennials lead the pack in terms of being intimidated, and I completely understand that, being a millennial myself. I graduated from college in 2008, and at the time we were just entering the global financial crisis. The economy was beginning to roll over, the stock market was crashing. It took me several months to find my first job out of school, and I heard all these horror stories about people losing thousands, tens of thousands, hundreds of thousands of dollars, years of savings in the stock market. And it was doom and gloom on TV. Everything you heard was about how bad the economy was, how bad the situation was. And for years after that, the talk was, well, the market's going to crash again, it's going to crash again. And then eventually that turned into, well, the market's gotten too expensive to invest now, we should wait for another crash. And so the unfortunate reality is that some people either pulled their money out or they never actually began investing. And we've had this huge run for the last decade plus that a lot of people have missed out on. So what's happened is that more money has been lost by trying to avoid a crash than has been made by avoiding a crash. So let's go through some of the fears that potential investors have. We'll start with fear number one. I might make a bad investment and lose my money. About half the participants in the Ally survey said that losing money kept them from investing at all. That's completely understandable. After all, throughout history, the market's gone down about as many days as it's gone up. But if you zoom out and don't look at the day-to-day volatility, what you see is the market trends higher over time. And the truth is, early on in your investing career, your savings rate is far more important than your actual rate of return. And so starting early will allow you to recover from any downturns early on in your investing career. And we put together some resources, and we'll leave a link down in the description to show you just how important your savings rate is, especially early on. And the fact is, you don't have to pick individual companies that are going to perform well over the long term. The proliferation of index funds, index investing, allows you to get low cost exposure to a lot of different companies. You buy one index fund and you can buy hundreds, if not thousands, of individual company stocks all in one package. And the fact is, historically, index investing has actually outperformed even professional money managers. So think about investing in index funds as kind of investing in the economy as a whole, as opposed to individual company stocks. So you don't have to pick winners and losers in this scenario. You just invest in the broad economy, and the winners and losers will kind of take care of themselves. Sure, you're going to have days that the market goes up, and you're going to have days that the market goes down, but if you don't pay attention to that short-term volatility, just accept the fact that you will lose money on some days, but over the long term, you're likely to come out far ahead. And if you need more information to get comfortable with the fact that you're going to lose money at times in the short term, we'll link to an article down in the description below that gives you some more information about the logic behind that. Another fear or concern is thinking that you don't have enough money to begin investing. I completely understand this one as well. I grew up in a lower to middle income household, and investing was something that either rich people did or people that just like to gamble did. And so I never really had much exposure to investing or the stock market. Now, you do want to be able to cover your normal monthly expenses and also set aside some money for an emergency fund, but once you have that taken care of, you can begin investing with even small amounts of money these days. The first place you probably want to look at is going to be like an employer sponsor plan. So this is going to be like a 401k or a 403b. And often you can begin investing with as little as like 2% of your paycheck. This is especially important if your employer offers what's known as a matching contribution. This means that if you put in, say, like 10% and they match you up to 10%, you put in 10% and your employer puts 10% into your account as well. This is completely free money, and if you want to learn more about 401ks, we'll leave a link in the description to more information. Outside of an employer sponsor plan, you can open up an IRA or a brokerage account, and many brokerages now will allow you to buy fractional shares of stocks or ETFs. And some let you go as low as $5 to begin investing, so you don't have to save up thousands of dollars just to get started. And we'll leave a link in the description to a list of our favorite brokerages. And the third fear is not knowing who to trust. 31% of of participants surveyed said they weren't exactly sure who to trust, so they didn't get started. And it can be difficult to know the difference between a salesperson who's just trying to sell you a product and somebody who's really trying to help you in terms of your investments. So this is the way I think about it. They call them financial advisors for a reason. They're supposed to advise you and help you make decisions about your finances. That doesn't mean that you turn everything over to them and they just handle everything for you. So instead of thinking of it like a yard guy that's going to come and mow your yard for you, think about it like a coach and player relationship. So the coach gives you instruction on how to execute the game plan, but the player actually is the one that has to execute the plan. So you should be intimately involved and comfortable with the decisions that are being made about your money. And you should always be learning from your advisor and understanding what's going on. Another thing to look at is the fee structure. This is going to tell you what the incentives are. So is your advisor incentivized to sell you a specific product, or do they just generally get a fee for providing advice to you? A fee-only financial planner is often a good option, and we'll leave a link in the description to more information about fee-only planners. Another route is just to simply try to do it yourself. There's never been an easier time to learn about finances, investing, the stock market, and everything you need to know about doing investing yourself. And at the Simple Dollar, we have tons of good, valuable resources that you can learn everything you would need to know to begin investing yourself. The fourth fear or concern is just simply not knowing how or where to get started. 24% of those participants surveyed said they didn't know where to begin investing. This makes sense when you consider that between mutual funds, ETFs, and individual stocks, there's around 15,000 different options to choose from to begin investing. And studies have shown even when you get to a couple dozen options, they can become overwhelming and cause inaction. So it's easy to understand how it can become confusing and overwhelming to begin investing. So let's make this simple. First, you're going to start with your 401k or other employer-sponsored plan, especially if they have a matching contribution. If they offer a target date retirement fund in that account, that's often a good option because they make all the investment selection for you within that fund. As you grow closer to retirement age, they begin changing that allocation and moving the risk back. We'll leave a link in the description if you want to learn more about target date retirement funds. Next option would be to consider an individual retirement account, either a traditional or Roth IRA. And then from there, you may want to look at doing a taxable brokerage account. Again, we'll leave links to lists of our favorite places to open those accounts. So all that said, investing shouldn't be scary. Just know that you are going to make mistakes, but the faster you make those mistakes, the faster you can learn from them. And it's also impossible to time the market perfectly. One option is to consider dollar cost averaging, and we previously did a video on that. We'll link to it up here. So instead of being intimidated by investing, try to be excited by it. It's been one of the greatest wealth builders, wealth creators that we've ever had. Try not to pay too much attention to the day-to-day movements of the stock market. Know it goes up and it goes down. If you pay too much attention to it and you watch the news too often, it's easy to get emotional about your investments, and emotions and investing generally don't mix all that well. There's rumors of a study done by Fidelity where they looked at the performance of all the accounts that they had on their platform. And what they found was that the best performing accounts were the ones where people had forgotten that they had the accounts and didn't make any changes for years. So the point is, try not to make short-term decisions about your long-term money. If you enjoyed this video at all, please consider dropping down and hitting the like button. Subscribe if you haven't already. And for the Simple Dollar, I'm Dustin, and I look forward to seeing you again soon.